Welcome everyone, it's Enrico Janko. I'm the Signal, and we're powered by the mighty Team Alliance. We're on the chart today. As you can see on my chart, this is the gray area from yesterday's chart. I just left it up there. I didn't want to just take it down yet. We see how the market stayed within this gray area or blue area, whatever you want to call it. It stayed in the area for most of the time, and then it broke out of that area maybe about what time? 1 o'clock in the morning, it had its first breakout, came back in that area about 4 o'clock in the morning and broke out again. All right, so I put a second grayed area box that encapsulates the most present action going on right now. So that's what this is, and that's what this box is here. We got a bunch of news coming up, right? And we know that this news actually moves the market, right? This news is going to move the market at some point. Right now, the market probably is not going to do anything really maybe not too crazy. I don't know. It could. But everyone here now is in anticipation of this news items that are coming out, right? 1, 2, 3, 4, 5, 6, 6 different news items that are coming out. Some of them will, I guess, will really affect the price, and some will not affect the prices as much as others. But we never really know what any of these news items can do. You got to understand that computers control everything that this market does, the Forex market. They use logic. Everything they do is going to make a bunch of sense, even if it's hard for me to understand or you to understand. You must understand and know that the short-term computer algorithms are running, and the short-term computer algorithms and this news will start to determine the speed and the path of all this activity. All right, the fundamentals that are going on, they're going to actually determine where the destination of these prices go. Right, so we don't know anything, but they know everything. I know everybody thinks there's a bunch of convening in the back office or something to take everyone's money. But most likely what is really going on is that these people, all these people in the market that move this market are just really smart people trying to make the most amount of money as they can. Okay, that's all that's really happened. No one is actually trying to trick a retail trader per se. No, they're moving money the best way they can. They can't hide it, so they have to move it in tricky ways, right? So, and we're talking about not just one institution, but many institutions. Some institutions even trading against each other, because that's just what the process is. That's what their computer algorithms tell them needs to be done, right? They'll have a whole department, trading the dollar, and they're trading it not off of, price patterns. I mean, some of them will look at some price formations and price patterns, but they're trading these off of computers. Each institution is actually independent of all the other ones. They don't sit there and collude with each other about what they're doing, because they're all trying to make money. You understand? Even, like I said, these big institutions have many traders that are even competing against each other. Of course, the object is just to make money. All right? So I think every move on this chart is important, because it's telling you where all the money is being traded, right? And each each one of these ticks and trades, it can be motivated by 100 different factors. That's why we always have to have this level of cautious in the market, right? So anytime I'm looking, I'm always thinking about what the bulls are doing, what the bears are doing, right? I see like these bulls, I mean, trying to bring the market up. And I look at that knowing that the market has been, in a little down movement. So I know that for these bulls to, be able to bring this market up, that they have to be, pretty strong to be able to do that. All right? They have to be pretty strong to be able to do that. So those are just some of the things that I'm looking at. We want our particular trade, our breakout trade. That's why I'm watching this area right here, and I'm looking at it, just looking at it, because I'm favoring this bear move right here that I'm looking at. I'm looking at this bear move, 35, 37, 32, 37, and 32, 35. I'm looking for the price to continue downward, like it's doing here right now, right? So that's what I was looking at. But I'm not going to actually, I'm not going to actually take advantage of that action right now and place a trade, because the trade I'm particularly looking for is just a breakout trade, and I want to break it out from this blue area. Once again, in this blue area, if I cut it in half just like that, you could kind of see down here I'm looking for the stronger bulls. Up here I'm looking for the weaker bulls as usual. Up here I'm looking at the stronger bears. Down here I'm looking at, weaker bears as we go further down, right? I can even extend this box down if I want to. This box right here just encompasses 85% of the activity. So I can move it down here and it'll still be valid a little lower. This is at 32, 33 right now. I move it down to 32, 30, 30 maybe. 3 more micro pips down. We're still looking at the same thing pretty much. So you don't have to be super accurate with this box. This box is not for surgical procedures. This box is just to block off most of the information and to give you a visual of what's going on, right? As this one here is, we see this little breakout point right here. And what did our parameters say that we're going to do? We're going to wait for it to break out, then come all the way back, because it might be a fake, and then break again on that. So that's why we're not doing anything. We're not doing any types of trades or anything at this point right now. All right? We're just waiting for this breakout, because mainly what we're about at this point in time in this trading, and what we're doing fully right now, what we're doing is looking at the market, looking at the price behavior, so we can eventually trade off this price behavior confidently, right? We want to get away from being scared to do everything. All right? The market, you got to remember, is always searching. It's always searching for a value and a balance, and it spends most of the days on the bull side and the bear side just looking for where the price levels are. Just looking for price levels. Just looking for prices. That's what happens. You see this market dropping here, it's looking for where the demand for the prices are, right? All these prices, they sold these prices down. Now they need to, look for the demand. And what did we say? The high demand should come from down here somewhere, if there's going to be a high demand. It should come down from 32.30, 32, what's that, 27, right? But look at that market. That market is doing a hard push right now, right? But we know that most times when it comes out of that box, most times it's a fake, right? So let's just watch it and let's see what goes on. Let's take a peek over here just at our Nadex so we can see how the prices are actually moving. Okay, you see 32.31, right? And 32.33. We know 32.33. We know that's the strong bears up there, right? 32.33 is a stronger bear. All right, and and you can see them pressing down right now, right? You see it pressing down. Most people would probably jump into a trade at this level, and it's okay if you're kind of high up here. If you're about 32.33, right? If you're about 32.33, you probably feel pretty good, but you can't get that type of trade down, right? 32.31, you could get that trade now, but right now the option price is a little low. You want to stay around at least 15%. This is a little low for us, so you might not be looking at that. So you might be looking at 32.29. If we look at 32.29, I don't think that's in a strong buy area. Right? I mean, I don't think that's in a strong sell area, this 32.29. You might win it, but I don't know if it's a strong area because of this. It's a long extension here, and the market is the first time it's out, breaking out of there really. So you might get the trade off, but you have to be forewarned that it's a little dangerous, I probably want the 32.27 buy, maybe, probably. Let me look at it. Let's pull out real quick, see what we got. Okay, let me see on the 1 minute what it tells me. On my 1 minute, it's still pushing down also. So this trade might actually break a little bit. Might be somewhat a little breakout for us. Let's look at this 29. I'm just looking at this really quickly. I just want to see what's going on. Okay. Last 30 seconds on here, you could have got a strong buy right there. See there? As I said, you see your breakout here. And you see this breakout having to hold up right here. You see they're taking profits. These are people taking profits on the breakout right here. So when they take these profits, here, right here, when they actually go and take these profits, you will see the price reverse back, and the bulls have a amount of control. But if there's not enough that come off the sideline and help, then this market still keeps going down. Right now, we see that maybe they found a little demand. So if we found some demand, the price will start going back up. Now, these are all just little things, but they are very revealing about what's going on. All right? So you remember that everything that's happening, it's about, you got 50-50 chance of odds all the time. And then when in certain instances, those odds can go up to about 65, 70%. And that's where we want to catch our trades at, when the odds are going up in our favor. This particular area right now, the trade, prices, the bear market pushing prices down. Then we see the price go back up. Now, this is something we kind of like to see. We want to see the price push down, come back up to our box, right? And then our box reject the price again and give us another move down. And that move down, we feel, should be a stronger one, okay? If you notice, most of the time this breakout is not going to happen, because this breakout is a strong extension. Like the bears on this to break out fully, to break out of this fully, they need a total imbalance. They have to absorb all the demand at this level, and you can tell there's plenty of demand, usually at this level, right? But you can see how it's getting absorbed. Look how strong this trending bar is. Look how strong it is. Then look how strong this one is, right? Now look how strong this one is, right? And look where the power comes from. The power comes down there. The power comes down there, all right? So now, since a lot of these demand was absorbed, I can't be sure all the time that this is going to stay up, that these bulls are going to stay up, right? So it's hard to go in there and say, even though this looks like a pretty good area, right? Since the areas change a little bit, it's kind of a little hard to say, let me go in there at 32, 33 and just take a trade up. Let's even look at it on here real quick so we could take a peek, see what's going on. Like I said, this is all trading. This is what you're going to do when you're trading for yourself. There's a lot of figuring out to do. It's a lot of figuring out to do. Like I said, let's see if we get any push down from this. This is strong. This is a pretty good move up right there. But look at that. See that? See the push down right there? See how we got all the way up there, then you got that push down, right? That's what we're talking about. That's exactly what we're talking about. And these are the type of things that could tear up your account if you're not really paying attention to it, right? It'll tear up your account. Now, when you go in here, you still got to be very careful of how the market is moving. You see, you got to be still very careful, because they're still in that 32, 33 area a little bit. It's still in that area a little bit. You might go in there and swipe it real quick, but you're only 2 micro pips, so let's not mess with that. Let's not mess with that. We could easily lose that if that doesn't work out right. You see what I'm saying? Look at it already. It went over. We're not going to squeeze anything. We're going to actually wait for opportunities that are high probability. High probability opportunities all the time. All the time. Most of these opportunities, 95% of them, will not be high probability. Look at the gray area again. Look how price breaks out just barely all the time. They fake out. They fake you out all the time. All this fake outs, and they come back into the gray area. All right? So we're just going to keep watching that behavior, because we're going to be able to take advantage of that behavior. Going to be able to take advantage of that. I look at these. I like these price moves also, because Like I said, you cut this box in half, right? Now look at that. You see the bulls trying to make it to the other side of this almost, right? And that's a tough move for them. Make it all the way to the other side of this. You know, that they gotta be really, really rocking to do it. And then with such a long bar like this, especially at this time, going against the current trend, you have to be wary of the fact that this might peter out soon, right? It might just completely on itself. Or it just might do what it just did, but this can go completely on itself. So up here, you're going to find weak buys up here, evidenced by, you know, these wicks, right? But everything I said can change in an instant, as it just has. So even though I'm looking at everything going low, now I got to look at everything else going high, because this news is affecting all of this. This news is affecting this. People already, the market, the institutions already know kind of what this ruling, some of this ruling is going to look like. They're already in anticipation of it. So now they're going to start moving the market, right? And where she stops, no one knows, right? I know you can look at this a little bit and you could kind of tell it might end up back up here somewhere, back up into our region, again, our gray area, right? Might end up back in our gray area. So we'll be back in the gray area again, or it'll make a new gray area right here in between these two gray areas. And this will be the area that we'll be working in. And we'll be doing all our fake outs and breakouts from there. So this is just how the market just moves all the time, and you're constantly battling, making decisions. Is the market going up? Is it trending? Is it in this range? You're constantly doing that. All right? All these people that are moving money, these large institutions, these big markets, these banks, they know all about these upcoming meetings and how it's going to affect price. And they already, it's like I said, a lot of it is already reflected in the price. All right? And there's other variables that these institutions will be looking at. It's not just what's going on in this news. They have personal business of how to move their money that they have to look after, and they want to see, you know, themselves in the right side of the market so they can move this money properly. Truth of this matter of all of this is that, you know, a lot of talking goes on. You hear me do a lot of talking. You hear a lot of people do a lot of talking. But the reality is that there's no real experts in it, because no one could actually tell you about what's going to happen in the future. Right? We can look at the fundamentals and we can look at the technical analysis and the price action. Still, it's all just 50% probability of being correct. Anytime we are correct, it has nothing to do with this fundamental or news or anything. It's going to have to do with our ability to read what's going on in the technicals. Obviously, you could tell that the experts, the institutions, they view this news, right? They view this news that went on they view it as bearish for the dollar, right? Right? And strong for the pound. So it's a constant reminder that why does price move? It moves because there's more volume being bid on one side than the other. That's why the market will move one tick. This market right here moves, this move one tick because there's more demand than there is supply at this price, right? No matter how weak or strong it might seem, at this price right here, right now, there's more people buying 32.51 than there is selling 32.51. Evidenced by the price up at 32.514, right? Long as people are buying at 32.51, the price will be at 32.51 until there's enough supply that will make the price move. It's always going to be that way. Always going to be that way. It's necessary for these whoever's in the market, it's necessary for them right now to fill their orders. So they're going to move the market as they can so they can fill their orders. All right, that's what their computer algorithms are telling us. And it's important that we talk about computer algorithms and all that, because as you get the smaller time frames, you're going to be dealing with more bots and computers, and you're going to have to maneuver and be logical and smarter than them, which is going to be more difficult as we go further and these computers get smarter. Just talking to my co-founder, we was talking about how now computers are actually beating people, champions at poker. And I talk poker because poker involves bluffing and tricking, lying, and all of those things that people do, humans do, and that we're supposed to be pretty good at it. Come to find out that computers are actually better at doing those things also. So eventually computers are going to probably rule the trading. So we got to make our money now while we know that these banks and institutions can't hide from us. All right? These mathematical models and programs they have, like I said, they're going to determine how much they buy and sell. And they're going to, receive orders all day. And so the price actions that you're going to be seeing is just all of them. All that price action that unfolds makes traders just move. Just like this market going up right now. Traders that's on the sideline, they'll start to jump in, and that'll help this market even move up further. You see? So it all works together. It's in a synergistic way. Right? Since the institutional activity that's going to control every move is so huge, they're going to do most of their trades only on strength. Right? And they will always start to defend where their entries are. So you see this strength and where they entered at. Right? They were entering down here. So I would figure that when price comes down to these areas again, they're going to be defending this area very strongly if the market has not done everything they needed it to do. So they might need the market to come up all the way up here. They might need it to come all the way back down, and then if it comes down, they'll defend the area, bring the market back up. All right? These are just so many different things. This is how much decision making we do all the time in our heads. After a while, it becomes automatic, but while it's not automatic, you're thinking about it. And it's very difficult to think about all these things and be taking 8, 10, 12, 15 trades a day on this 5-minute Nadex chart. All right, very difficult to do that. We're seeing it hit the bottom of this blue box now. Let's extend out our box again, right? Let's still extend it out some more, just to do it, right? Just to show you two different zones right now. All right, this is what it looks like, kind of on a 15-minute chart side. See all the news again. So now this jumps all the way up here. It might get rejected here, or it might, it might trade all the way through, depending on the imbalance in the market or the balance in the market, depending on what happens.